My portfolio lost about $5,000 this week. That's real money in a real account, not a back test, not a simulation. But the loss itself wasn't what concerned me most. It was software. Strong companies are beating expectations, raising guidance, and their stocks keep falling anyway. Normally, that's when the voice in your head tells you to sell before things get worse. But when I looked at my remaining software positions, the businesses underneath them still looked strong. So I had one question to answer. Am I holding a dying sector or sitting through the setup for the next major wave?
But before I could answer that, let's see what actually caused this week's portfolio loss.
So here are the actual numbers. The portfolio fell from $119,200 to $114,300. That's a loss of $5,000, or about 4%. Software was a big part of that, but it wasn't the whole story. The biggest hit came from Deckers, down about 11%. That's roughly $1,200 gone right there. ServiceNow finished the week down about 4%. That position is worth around $8,000 now, and it's down 11% overall. Microsoft dropped about 3.8%. This is the position I promised to show you last week. It's my biggest one, worth $21,400, or almost 19% of the entire portfolio. I also closed my IGV put credit spread for a $200 loss. The trade hit the stop I had set before entering. And once that happened, the original risk to reward no longer justified staying in.
Welcome to Precision Capital, where I document the real decisions behind my journey to grow $100,000 into $1 million. Every trade is posted to the Community tab before the outcome. So we know that software wasn't responsible for the entire loss, but it was the part of the portfolio where the decision was still unresolved. The IGV trade was straightforward. It hit my predefined stop, so I closed it. But there was no equally clear signal telling me what to do with Microsoft and ServiceNow, so I needed to zoom out. Was this weakness limited to my two stocks, or was the entire software sector being repriced? So I started by looking at what was actually happening across software. On this chart, the green line is SOXX, the semiconductor ETF. The blue line is IGV, the software ETF. And when you look at the full chart, something important shows up. For most of the period, the two sectors were moving much closer together. But around October 2025, the relationship started to break. Semiconductors took off, while software was left behind. And since then, that gap has become difficult to ignore. So this was no longer just a question about ServiceNow. It became, why was money pouring into AI hardware while flowing out of software? And here's the explanation that makes the most sense to me. Think about the AI boom like a gold rush. Before anyone can make money off the gold, somebody's got to build the roads, supply the equipment, provide the power. For AI, that's chips, servers, networking, data centers, electricity. Right now, Microsoft, Google, Meta, Amazon are spending hundreds of billions building that infrastructure. And if AI is going to keep growing, all of that has to come first. But that money has to come from somewhere. And one possibility is that companies are prioritizing AI infrastructure while delaying some traditional software purchases. New contracts take longer to approve, buyers become more selective, and some software companies end up competing for a smaller share of the budget. At the same time, Wall Street's worried AI agents might eventually replace some software products altogether. So software's getting hit from both directions. Spending pressure now, disruption fear later. That helps explain why money's been leaving the sector. But pressure isn't the same thing as permanent damage, and we've seen a similar sequence before. When the internet was taking off, the first big winners were the companies building the networks and hardware. When smartphones took off, money flowed into the devices and chips first. The applications came later. That's the pattern I keep coming back to. Infrastructure gets funded first. Software may get paid second. And the important word there is may, because I don't think every software company survives this transition. If AI can do the main job of a product, faster, cheaper, with less friction, that company could lose real value. So I'm not bullish on software just because the stocks are down. I'm focused on the companies that are hardest to replace, the ones deeply embedded in how businesses actually run, the ones with real switching costs, the ones that can build AI into their product instead of getting replaced by it. That's why ServiceNow and Microsoft still matter to me. I don't see broken companies here. I see strong businesses getting punished along with the rest of the sector. That doesn't prove they've bottomed. It doesn't prove I'm right. But it's enough for me to believe this might still be pressure, not permanent damage. Here's where I could be wrong, though. If AI agents don't just slow software spending, but actually make entire categories less necessary, this isn't a temporary cycle. It's permanent disruption. And holding through that wouldn't be patience. It'd be denial. That risk is real. It's why I'm still holding ServiceNow and Microsoft, but I'm not adding right now. I still believe in the thesis. I just don't have enough proof to increase the bet. So back to the question. Dying sector or setup for the next wave? I don't think software is the sector dying. The pattern's too familiar. Infrastructure gets funded first, software gets paid later. And I don't have a reason to believe this time is different. What I don't know is when the money will flow back to software. Hardware's still winning this race right now, and software hasn't shown me it's ready to turn yet. The next test comes very soon. Microsoft, which I have almost 19% of my portfolio, will report earnings on July 29th. That'll tell me a lot about whether this is still hardware's cycle alone or whether software's finally starting to catch up. So subscribe and turn on notifications if you want to follow this journey to $1 million in real time. I'd love to have you along. Every trade is posted to the Community tab before the outcome.